Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic is how to spot momentum shifts, right? A lot of people get caught on the wrong side of the market. In fact, some 65 to 70% of all stocks follow the market, right? A rising tide lifts all boats. And most people don't understand or can't foresee when the market is likely to change direction or shift momentum. Well, today we're going to talk about things that you can look for to help you, quote, see the turn, so that when you're in a stock, you can look at not only the stock, but you can also look at the market to see when it's likely going to change directions. See, I have a phrase around here when I'm in the chat room. I frequently say, oh, you can fork that. And what I mean by forking that means it's done, it's over, it's not going to work anymore. And sometimes we're at break even when that happens. Sometimes we're in the money when that happens. Sometimes we're slightly out of the money when that happens. But if you can save yourself half of an hour, a quarter of an hour, 3/4, 1 hour frequently, then it ultimately saves you a lot of money. So today we're going to talk about the turn, basically, the momentum shifts and things that you guys can look for to help save you a lot of money on these turns. Some of them are so obvious and people are like, oh, I'm just going to stay in it and take my lickings. Well, I guess if you have an all or nothing strategy, maybe you could do that. But today we're going to talk about how to see when the market's going to change direction and when the stocks you're in are going to change direction, so that you can either save yourself some money or take advantage of that change in direction. If you like these videos, click that like button, hammer that subscribe button. Guys, I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is how to spot momentum shifts. There's a lot of different things that we need to learn to be a successful trader. And a lot of people focus on patterns. And as you guys know, money management is really the biggest thing, most important thing you need to learn. And then trade management. But patterns are very important. And today we're going to spend some time talking not necessarily about specific patterns, but things that you need to be aware of, things that you need to be looking out for when you're in a trade. And a good example of that, and I probably should have put this in here, and I apologize. If we have time, then maybe I'll show it later. But we traded Baidu today, and you can go back through the chat log and see. I said Baidu's done. Done. It's finished. You can fork it. It's over. Okay, and I said the same thing on our trade on, what was the other trade we took today? It wasn't, Google. So it's done. So you sit there and go, well, geez, Jared, why are you making those comments? Are you just flipping a coin and saying that trade's done because it landed on tails? No. There's very, very specific reasons I'm making those comments. Now, some of you at the moment are going, oh, well, this is the let me fork it lecture. It's not. It's different. There's some similarities, but the slides are totally different. But the concepts can be similar. The market is giving us information all of the time. All of the time. Every single chart, every tick that forms, every trade that is placed is giving us new information. The question is, what are we doing with this new information? Are we using this information to make our trading better and more accurate, or are we just sitting back and ignoring it? Okay? Notice you haven't heard that in a very long time, KL. I'm just saying. But anyway, so today we're going to talk a bit about that. Okay? What are we looking for momentum changes of direction as well? And keep in mind this, the vast majority of stocks move with the market. Right? 60, 70% of stocks move with the market. So we want to know the ones that don't, but also we want to know the ones that do. You're like, well, what does that mean? What I mean is I want to be able to look at the market. I want to be able to look at a stock and go, ooh, that new information has now allowed me to either get out, stay out, or possibly get in or add. Like, it gives you so much, I guess, confirmation or lack of confirmation. So that's the topic today, and I think it's going to be an interesting one. Okay, so let's dig in. Boom, shock value. All right, what were traders thinking as the red bar was forming and creating an engulfing bar. So first, let's take a look at that, okay? So if we go over here, okay, we have a little consolidation where we have red bar, green bar, red, red, green, and then whoop, right? So, like I said, every new bar gives us information. Right? What we do with it is up to us. Now, remember, I don't have any prior information here. This is just a run-of-the-mill, random, sideways consolidation, right? So 1, 2, 3, 4, 5, 6 bars. And you're looking at this, and again, without really any future, or I should say future, past information, someone might consider this or might look at this, okay, as a breakout. Right? They might. Why? Bottoming tail, bottoming tail, bottoming tail, bottoming tail, bottoming tail, that kind of stuff, right? Now, we don't know if this stock is coming from a big pullback. We don't know if this is coming from a bounce. All we see is this. But the new information that we just got is this big old red bar. That's the new information. So again, these 6 bars to the left, I don't know where it came from. And for this analogy, it doesn't really matter, okay, because we're focused on this big red bar, this new information. This new information right here suggests lower prices. Because whatever was happening during these 6 bars, this stalemate, this tug of war. Now remember, where something happens absolutely matters, right? Where it happens definitely matters. But in this particular case, this red bar is very telling. And the red bar is saying sellers are in control. Whether this came from a move above or whether this came from a move below, this bar says, hey, whatever was happening during this 6-bar run, sellers have won the battle. I'll repeat, whatever was happening during this 6-bar run, sellers are now in control. But then we go, has their thinking changed when it turned into a bottoming tail bar? And if so, why? So we start out by going, what were traders thinking as the red bar was forming and creating an engulfing bar? It's engulfing, but it's more than just engulfing. It's igniting and engulfing, right? It's engulfing the green bar and igniting a move below support. But has their thinking, remember, new information. This is basically the whole lecture. New information. Every bar gives us this. So the new information now says, whoa, that's no longer a wide range red bar. It is now a bottoming tail bar. So now we have to think, okay, new information. What was or what looked like, wow, a confirming bearish igniting bar, right? That's what it looks like. Hey, bears are in control has now changed into a the sellers were unable to hold the line. Right over here, the sellers looked like they were in complete control. And now all of a sudden, it's not the case anymore. Buyers have stepped up. And this area that was supposed to be what? Support is broken. Support, once broken, becomes the ceiling, right? The floor. Now the ceiling, all of a sudden, was also broken. So just think about that. Traditionally, what you're thinking is, okay, over here on the left is the floor. When the floor is broken, on the way back up, the floor becomes the ceiling, which is on the right. But that didn't happen here. If we went above that, we went halfway into this green bar again. New information has made us now think differently. And you don't have a choice but to think differently. So what happens to a lot of traders is they look at this bar, this red bar breakdown, and guys, this has happened to us about 4 times in the last 3 days. They look at this, and then they look at this, and they're like, oh, well, maybe that bottoming tail will get engulfed, and the sellers will keep pushing the stock lower. Well, sure, maybe that could happen, but that's not what you should be thinking. What you should be thinking is, oh, shit. This is not at all what I wanted to see. This is the worst possible thing you could have seen for a breakdown. Now, hold on. We're not done. Because remember, where it happens matters. So if this on the left was truly a breakdown, this is good. This is really bad. Wait, let's do it again. If this is a breakdown, this on the left is really good. This on the right is really bad. But what if it's a breakout? What if it's a breakout? All of a sudden, it becomes better. It becomes better because now we have this tug of war between buyers and sellers, and we're hoping and expecting the stock to go higher, right? Assuming we're in an uptrend, right? And all of a sudden, it breaks below support. You're like, oh man, it's not as strong as that. Boom, bottoming tail. It's a confirmation of strength. This is what you want to see on a breakout, certainly before it breaks out, not after, right? But this is what you want to see before a stock breaks out. Therefore, let's turn the tables. Therefore, when you see this on a breakdown, how are you feeling? Uh-oh. You're not feeling so good, right? So, new information changes the picture, which changes our bias. A possible breakdown turns into a confirmation of strength. Now, obviously, this is very obvious information, but this is how you have to read every chart all the time. You get a new bar every 1 minute, 2 minutes, 5 minutes, whatever time frame you're on, you get a new bar, and you have to assimilate that information and say, well, what is this new bar telling me? Has it made the trade better? Has it made the trade worse? Or is it kind of indifferent? Just another bar. Every bar you're thinking about this because you want to be as accurate as possible. Okay? So now let's change the information again. What were traders thinking as the red bar was forming and creating a bullish bar? Well, this is exactly what we just talked about. So we don't even have to cover that we just talked about. But has their thinking changed when it turned into a green engulfing bar? See, this is what always surprises me about traders is this. You see this red bar here on the left, and you think, okay, good. The initial breakdown is doing what I expected. Cool, no problem. And then you get a big green engulfing bar. So the initial breakdown bar closed, and then following that, you get a big green bar. And now most people, even novice traders, are going, I'm in trouble. Well, it's not that much different than this. But yet, for some strange reason, traders, when they see the bottoming tail, they still are clinging on to the hopium. They're like, well, maybe it'll still work. But yet, when they see the engulfing bar, for some reason, they're going, yeah, I'm in big trouble now. Human beings are visual creatures. And in my opinion, it's the visual aspect here that gets them. And this says a lot about new traders. It says they can't visualize the green when it's a bottoming tail, but they see the green when it's an engulfing bar. The concepts are almost identical. So when you see the bottoming tail, envision it as a green bar. Do this to it, okay? Watch. Do that to it, okay? Push that up, move that like that. That's exactly how you should be thinking of this, right? Do that. Because now you have the visual representation of buyers. Sometimes that wick, that tail, doesn't register with people, especially newer traders, right? Okay, so the bottoming tail is battle tested. It sure was. But the same thing happened here, Sean. There's no difference. I shouldn't say no. That's a slight exaggeration. There's a subtle difference, but not much. So what if it happens on the same bar versus the next bar? The end game is the same, right? Whether it happens on the same bar or the next bar, the concepts are pretty much the same, okay? So, a reversal candle's potency is measured by the depth or level of penetration into the prior candle. So what that simply means is that candlestick Is that a 20% retracement, 50%, 70%, 100% retracement? The more it retraces back into the prior candlestick, the more potent it is, the more likely it's going to take out that area. If it does a 20% retracement, it's not a very big deal. But if it does an 87% retracement, it's a very big deal, right? Tails on a candle either increase or decrease the supply. Topping tails increase supply. Bottoming tails decrease supply. Think about that for a second. When you see a tail, the size of that tail is either increasing or decreasing supply, which is buyers and sellers, right? Decreasing of supply simply means there's more greed. There are more buyers. The buyers are eating up the supply. It's like when you're selling something at a store and they run out. Well, how did they run out? More buyers than product. More buyers than supply. Supply decreased because so many people wanted it. Okay? When you think about the supply increasing, you go to the store and they have every size in the book, from a size 0 to a size 30. Okay? 30 is pretty big. But anyway, you get the point. The opposite happens, and they don't have any supply but the quadruple X. That means people like that product, or it was cheap enough that people wanted to buy it. Same thing with stocks, because it's the same concept. Just supply and demand. That's all we're talking about. Human fear and greed. And it's the only difference between jeans in a store and a stock is it's represented in red and green candlesticks on your computer versus you going to Walmart. But the concepts don't change. Liken it to your everyday life, okay? Expanding range candles, i.e. wide range igniting bars, tell us buying or selling power is ignited or exhausted. As it says, context here is very important. What does that mean? Guys, when I say context here is very important, what that means is where it's happening is very, very important. Something happening 7 bars up is a lot different than something happening 1 or 2 bars up. So the context matters whether it's igniting or it's exhausting. Is it expanding the range and ending, or is it expanding the range and igniting? Totally different where it happens. Okay? So narrow range candles tell us that volatility is low and momentum is decreasing. But, this is important, it doesn't mean that the range has stopped expanding. It just simply means the stock is resting, or it could be reversing, right? But for that period of time, the momentum has decreased, like you just saw in this last slide, right? The momentum was decreasing in the middle of this base, right? It was decreasing, 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 and then all of a sudden, boom, range expansion bar. But the range expansion bar didn't last very long. It got engulfed and went the other direction. Confirmation of strength, picture of money, right? Those kind of things. So let's take a look at some examples. Okay. Now, you see a wide range bar. Cool. It's igniting. 2 narrow range resting bars. Great. You're thinking 3 bar, then 4 bar play, then doji. Like, wow, this is amazing. And then all of a sudden, boop, boop, that happens. This is like the greatest thing that could ever happen to you in a trade, right? And this is almost exactly what we just saw. We just saw a bottoming tail happen, and we also saw an engulfing bar, okay? So when you see this, what is it? What are you thinking? What should you be thinking? How are you thinking when you see that? So, okay, let me do this first. Let's take that bar out of the equation. Let's just forget about this bottoming tail bar. What were you thinking before the bottoming tail bar? I'm thinking wide range bars, narrow range resting bar after the wide range bar, above the moving average. I'm thinking bullish, bullish, bullish. As long as the range or average trading range isn't too extended, I'm thinking higher. It's the only way I can really look at this with the information I have is higher. So I'm already thinking this looks good to go long on. But all of a sudden, out of nowhere, goes whoop, whoop. bottoming tail comes in. Well, at one point in time, okay, at one point in time, what color was this bottoming tail bar? You know, I mean, you got a 50-50 shot at it. You got a 50-50 shot. At one point in time, what color was this bottoming tail bar? 50-50, and that's the answer you give me? Wow. I know you just want to say blue so bad, Sophia. I know it's right on the tip of your tongue. You want to say blue so bad. But don't. Say red. Just say red. Okay? This bar was a wide range red bar. It was. I mean, when you look at where it started, it went down, 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 and it was red. In fact, let's do this, okay? I know it's a little big. We'll try to do this here. Come on, let me just have that. Let's see if we can do this. All right. See if I can put this in there. Why did it give me the green bar? Isn't that weird? I just copy and pasted the red bar. Well, let's try it again. There it is, okay? We'll make it much smaller. Okay. You guys are very visual creatures, so I try to make things visual for you. That's what that bar looked like. That's what that bar looked like. It was red. Big time red. And it broke below the support area that we were looking for the stop loss to hold. Okay? And then all of a sudden, what happened? It started to go boom and move up 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 and move up. So, while it's moving up, what is increasing and decreasing? Demand is increasing. Supply is decreasing. Buyers are going, oh, this looks good. Basically, what they're saying is, look at it like this, guys. I don't know if this is a good analogy or not, okay? Look at it like this. You're at a store, and there's a hot item there. Whatever it is. I don't know if it's, I can't think of anything. The new Super Mario Brothers game. I'm showing my age. Whatever the hot thing is these days for kids, okay? Fidget spinners, but that was years ago. And all of a sudden, out of nowhere, somebody comes on the microphone at the store and says, 15-minute flash sale, every Roblox, every fidget spinner, every Pokemon's 50% off. Boom! What does everybody do? They pick up as many as possible. Do you understand the analogy? The analogy is this. People wanted the stock anyway. They were already buying the stock anyway. And all of a sudden they're like, what? I can get this thing 20 cents cheaper, 30 cents cheaper, 40 cents. Sign me up. Sign me up. And that's what I mean. You're at a store. And it's like, boom, out of nowhere, totally unexpectedly, like, oh, by the way, everything that you wanted today is 50% off, but only for the next 5 minutes. Sign me up. And then, boom, shoots back up. So this is a confirmation of strength. Picture of power, a picture of money. Now, over here on the right, it's the same. It just happens over a different period of time. But it's largely the same concept. This happened in one bar, so it was relatively quick. And I forgot to draw this on here. You can see how powerful that shakeout was. Look at the commitment when it finally broke. So all the people that got it cheap were just lucky because everyone else still wants it and are still willing to pay up for it. Okay? But now, if we move over to the right-hand side, it's a 3-bar play. Okay? Now, granted, the 3-bar play stopped out. There's no question. It is what it is. Right? Wide bar, narrow bar, right at 118. You get in, your stop loss is here, and you got peekabooed. So this one happened before we got in, on the left. This one happened after we got in. Unfortunately, probably took a stop, unless you gave it a really wide stop loss. But the trade actually gets a lot better because now not only do you have an engulfing bar, you have a little bit of a super 3-bar play, right? A green bar, people are like, oh, this is just a shakeout and the prices are going to go back up. And it was a shakeout, but the prices didn't go back up. They came right back down. Buyers are like, hey, we're buying this thing up. And the seller's like, no, we got this. And they took out all of those buyers. And then right down to the low, you short it, put your stop loss up here. Could you put your stop above 118? You could. You could. Right? This is not parabolic. Not parabolic. One more time, not parabolic. A $2 drop on a $100 stock? Get out of town, man. You need like a $20 drop on this thing to be parabolic. But anyway, I digress. This thing engulfed the green bar. This trade is so much better than it was originally. It was a good trade originally. Now it's a phenomenal trade. It's an unbelievably good trade. They don't get better than this. You better take it. It's basically reconfirming the weakness of the stock. Over here on the left, it's reconfirming the strength of the stock. Okay? Same here. What we have here is a wide bar, narrow bar, narrow bar. Okay? Now, we don't have a ton of void here, right? From 118 back to, well, I don't know, 126 or something like that. Okay? So this stock, if you take a look, is actually taken a little bit early. Right? It's a little bit below this resistance point. Okay? So it moves up, and this is the bottoming tail. Now, guys, what's the difference? Time frame. That's it. If you look in the pink box here on the right, and you look in the big blue box here on the left, it's the same stock. Time frame is the only difference. This is why you look at multiple time frames, why you drill down. So that you can see these bottoming tail bars. You can see these pictures of money. You can see this momentum shift. Okay? That's what we're after here. And then ultimately this thing moved up $3 on what was a $1.50 stop. So it did get the 2-to-1. Okay? I'm going to move on just a little bit quicker because we have quite a few more slides to get through. All right? Another example. Here's a stock that you're looking at on a slightly higher time frame. You don't have a lot of room here. Like 176.50, 177, up to about 181-ish, something like that. Over here, wide range bar, narrow range bar, rip. But that narrow range bar, bar number 2, is a bottoming tail bar. There was a battle that was fought here, okay? And the buyers are winning the battle. Now, is this a traditional shakeout? No. But you can see even on bar number 1 it was red for a little and the buyer stepped up. Bar number 2, bottoming tail. Okay? Ripped, pulled back, ripped, and this thing went significantly higher. Okay? Take a look at this one. Now, different pullbacks, but similar concepts. Right? Now, we have to make a decision whether or not you'd want to trade this, but the concept is the same. You're looking at a stock on the left that's super strong. I mean, this thing went up $4, give or take, $4.50, whatever, right? Little bit extended here. And this, talk to me, guys, here. Let's draw an arrow here. What is that? Talk to me, guys. What is that? Right here, where the arrow is pointing to. That bar the arrow is pointing to. What is that? Thank you. It's an ending bar. It's an ending bar. Why? We're already up 1, 2, 3, 4, 5 bars up. This is a wide range ending bar. Right? So this is the bar that when you're in the stock, if you're in it, you're going, okay, time to get out, time to take my money off the table. It went from 80 to 81.50 on the biggest volume spike of the day by quite a bit. All right? This is a walk away bar. This is a get out of Dodge bar. This is, if you're really watching it closely, a possible short on that bar. All right? That's what that is. Okay? And you're not expecting that to likely be broken. That's it. Probably set the high for the day. Okay? So could you have shorted it? Possibly, yeah. I mean, it's a pretty big move on some serious volume, and it leaves a topping tail. So anyway, it pulls back, gives you a little buy setup. Guys, what do you think about this buy setup right here? Okay, hold on. Let me put an arrow towards it. Right there. How do you feel about that buy setup? How do you feel about that buy setup? Right there. I want you guys to talk to me on this one, because I'll tell you, I get this question every day in the chat room. Every day. There's some really extended stock that pulls back a very small amount, and someone's like, what do you think of this buy setup, Jared? And I sit there and go, that's tough. Why? Well, it just had an ending bar. The stock has exceeded its average trading range, and the retracement level is slightly shallow. It's not for me. And then you take it anyway. And sometimes it works and sometimes it doesn't. That's an ending bar, and you want to take the buy setup into the ending bar. You could argue, again, it's not parabolic, but you can argue there's parabolic tendencies here. Sit there and you're like, wow, it is a strong stock. But man, oh man, that is tough. Bounces, stops out. Bounces, stops out. Right? So, let's get rid of that. Let's talk about this to the right. Big red bar comes in and boom, gets completely engulfed or mostly engulfed by a green bar. Okay? Now, it's different. It's not the same as it was over here. The problem now is the stop loss. You see, now you're looking at a stock that we know was strong. We see that. And it's engulfed this red bar, which is a picture of money, a confirmation of strength. But to get in at 80 and put your stop at 79 is very, very challenging. So this is one of those you might want to drill down for a lower, tighter stop, because remember, I'll repeat myself, we are not expecting this stock to put in a new high. That volume spike with that topping tail is big time. That's big time. Not expecting. It may break the high, but I'm not expecting it to break the high. There's a difference. It might break it, but I'm not expecting it to break it. So if you choose to take this buy setup at $80, do not expect this to break 81.25 or 81.50. I think this is a great scalp, but I'm not sure if I was doing like 2R all or nothing or 3R all or nothing. I'm not sure I would take this. But the concept is still there, right? I'm not sure I would take this, even though there's going to be a bounce. Okay, move over to the right. Big gap up from 28.40 to 29.80. Okay, 3 bars, it pops, and then wham, this thing comes down, bottoming tail, huge volume, and then engulfs that, chops around, and looks like it's about to go lower and retest it. So the stock already is between, in this case, the 20 and the 50 MA, and it looks higher over 29. And then this happens. This is interesting now. Now, am I expecting this to retest the $30 high of the day? No. No. This is too deep of a pullback to expect this to test the high of the day. But you might get a 50% retracement. And depending on your management, you might say, hey, 29 by 28.70 is 30 cents, and I feel like I can get 30 cents out of this. That's a 50%, a little less than 50% retracement. I feel like I can do that because of the engulfing bar. Now, I am not telling you guys to trade either one of these. These are difficult decisions to make. These aren't no-brainers, slap you over the head silly like the last chart we saw on the previous slide. But they do give you pause, and they do give you reason to say, hey, this stock should bounce. Because let's be fair, it's really rare a stock that's pulled back this deeply and has a 100% engulfing bar goes lower. They usually bounce and then maybe pull back and chop around. But when you see that, it's rare after such a pullback that'll stop out. So while it may chop around, the odds of it stopping, especially if you use the low of the day, are slim. So it might be worth a shot depending on the overall picture of the stock, depending on the market environment, etc. Now, what about this? What about this? So right now we have a stock up 1, 2, 3, 4, 5, 6, 7, 8, 9 bars in a row. On the 9th day, God took rest, right? No, I'm kidding, right? So now you have 9 days up, but what was the prior day? What is the chart saying? Take a look at the arrows. Take a look at all 3 arrows. Topping tail, wide range bar, volume spike. Oh, and one more arrow, this red line. Take a look at it. Topping tail, wide range bar, huge volume spike, red line. What's the chart saying? Pump the brakes, my man. I'm tired. That's what the chart is saying. I'm tired. There's resistance over here at 120. I'm already up 59 days in a row. This is not a wide range igniting bar. It's a wide range ending bar. Okay? So when you take a look at this, you're like, why would I buy that? You wouldn't, is the answer. You unequivocally wouldn't. Now, would you short it? Ooh, that's a tough question. I don't know. Maybe. Because you're probably going to get a pullback. To me, I look at this as semi-parabolic. It went from 106 to 122. I think there's a short-term scalp short in here for $3 or $4. And in this case, it went about $6. But you're right, Aaron. You could simply say, you know what? It's one of those things we see in the market. Too extended to go long, too strong to short. We say it all the time. Too extended to go long, too strong to go short. You could certainly make that argument. There are 4,000 or 5,000 other stocks you can choose from. No one said you have to choose this one. Right? No one said you have to choose this one. Okay? Now, what if we forget this for a minute and we look down here? This big red bar gets engulfed, pulls back and retests, bounces and retests. Now, in this area between 104 and 106, what's the thought process? The thought process there is the low has likely been set. Why? I'll tell you why. Because this super wide range red bar on volume has been taken out. And remember what I said on the last slide. When you take out a wide range bar in the opposite direction, that usually has set the high or the low. I'll repeat it. When you take out a wide range bar, especially on volume, the high or low has usually been set. And in this case, the low has probably been set. So while you may or may not trade this down here, you know the low has probably been set. And then the stock rips. But the whole purpose of this is showing you changes in momentum, showing you a change in the direction of a stock. This clearly points to a momentum shift at the top here. And it's giving us 3 reasons why. 4 reasons why. Resistance, topping tail, volume spike, wide range ending bar. Listen to the chart. Don't ignore what it's saying to you. It's like ignoring your wife. You're going to get in trouble. It's just not worth it. Listen to what she has to say. Shake your head. Say, yes, dear, I understand. Same with the chart. The chart is speaking to you saying, hey, man, if you go long, I'm going to slap you. Listen to me. This is the high. Don't go long. Either sit on your hands or short this. Okay? Here, what about this? What is the chart telling us? On the top here, these 2 blue arrows. What is the chart telling us? 1, 2, 3, 4, 5, 6 bars up. Topping tail bar. Huge volume spike. This is an extended move with a topping tail, which means buyers are starting to get out, sellers are creeping in. There's some profit taking, and wouldn't you if it went from 23 to 30? Some profit taking, and you can see the volume spike. And then it fights and rests for a while and then starts to pull back. Now, when it pulls back, You might find an area to buy this at 25 or 26, right? You might find an area right there to buy this at 25 or 26. But for our purposes here, the short-term high has been set. Now, let's go to the left. What is the chart saying here? Right here. 1, 2, 3, 4 red bars. Bottoming tail doji bar at 22. Well, let me see here. Tested, bounced. Tested, bounced. Tested, bounced. And this is the cleanest pullback it's put in yet. So 3 previous times this stock has tested this area and it bounced all 3 times. And this time it's the most extended it's ever been into this area. And it leaves you a bottoming tail. Hello, momentum shift. Change of momentum, going to bounce. Going to bounce. This is buyable as a swing trade with your first target at roughly 24.50 and next target $26. And then you have to decide, do I want to save some for a move above 26? But you're going to buy this down here. You're going to buy this down here. And you're going to look for 24.25 first target and 26-ish second target. That's it. It's very, very nice. This is a momentum shift. Stock going from what looks to be a stage 4 downtrend into a stage 1 consolidation back into a transition period that will ultimately lead to a stage 2. Okay? What about this? Let's take this arrow on the right-hand side. Okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars up. Wide range bar. What do we have? Resistance. 10, 11 bars up. Oh, it's a great 3-bar play up there, Jared. Really? Beyonce should tell you to the left, to the left. And you should listen to her because she's usually right. She doesn't make many mistakes. And when you look to the left, this thing is telling you, stay away, stay away, stay away. All right? This stock needs significantly more rest to continue its journey higher. Most likely it's going to pull back. It may peekaboo up, but it's probably going to pull back. Okay? You're up 9 or 10 bars. And the 10th bar of the move is a massive volume spike bar on a huge range, right? The biggest bar we see on probably the whole page here, the whole chart. And you think one little tiny resting bar is going to be enough to overcome a 10-bar move up and a double top resistance area? Beyonce is not dumb. Don't step out on her, Jay-Z. Doesn't work. Doesn't work like that. You know? To the left. Now we go over here. What do we see down here? Well, on the furthest bar, furthest arrow left, we see a bottoming tail. But where is it happening? It's down 3 or 4 bars, happening at a prior area of support. Now, I'm not telling you to buy this. I'm not telling you to buy it at all. I'm simply saying you can expect a bounce. And that bounce is probably shortable. You can expect a bounce. It's down 3 or 4 bars with a bottoming tail. Expect a bounce. Momentum is shifting here. Then it sells off again, puts in a lower high and a lower low. Big old bottoming tail after 1, 2, 3, 4, 5, 6, 7 bars in a row. Bounce, retest, bounce. Okay? Let the chart tell you what's going to happen next. Let the chart tell you what's going to happen next. And by the time you get over here, this 124, 125 area has been defended 3 or 4 times. Once here, twice here, 3 times here, 4 times here. So if you want to consider buying this at 126, maybe. But you're not going to buy it over here on the first time it tests. You need more confirmation. By the 4th time, you have that confirmation. Let the market show you the momentum shifts. Ooh, this one's a little too close to home, isn't it? Little too close to home on this one. Feel like Groundhog's Day. Yesterday, we took 2 trades. Netflix, mRNA. Actually didn't take mRNA, just took Netflix. Cliff and I both called it. Cliff called it first. I called it right after. Nice pattern. Nice red bar. Big topping tail. Couple resting bars. Ooh, nice little mini shake. I mean, juice box. Bee's knees. Juice box. 324 by 326. Okay, maybe we gave it a little more room. Looking juicy. To the right, mRNA. Look at this big green bar get engulfed. See this first bar of the day, green bar? It took 2.5 bars, 3 bars, but it finally got taken out. But we don't want to short right here on the first bar because it's too extended. We need a resting period. And what happens? You get 1, 2, 3, 4 bar resting period plus this little mini topping tail bar at the end. Looks pretty juicy. 147 by 148. We're sitting there going, ooh, ooh. I'm doing what I'm supposed to do. Topping tail, little mini shakeout, confirmation of strength on both of them, confirmation of weakness, whatever you want to call it. And then, oh, poo. Shit. That's it. When you see that, it's over. O-V-E-R. Over. I said as much yesterday, and that's it. So now, the question that you guys are having right now is going, well, what do we do? The second it breaks the high of this bottoming tails bar, which in this case is 325, you walk away. You take the half-hour loss and you walk away. I'll repeat. The second it breaks above that bar, that green bar right there, when it breaks above the green bar, right there, you walk away. If it doesn't break above the green bar, if the next bar immediately drops, stay with it. Meaning lower your stop to that 325 area or 325 above the topping tail. Okay? Brian, really? 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 How long you've been around, my man? Come on, man. That's like when I say, oh my gosh, guys, this trade is so good, back the truck up. And you're going to be like, really? Back the truck up? You mean like risk more than I usually risk? Come on. I'm not even going to dignify that with a response that directly answers it. All right? I thought I heard Jeff say that the resting period should be close to the size of the move. Did I catch that right? He probably has said that, right? The resting period should be close to the size of the move. But I don't, in this particular case, I don't have a problem with this. This is 1, 2, 3 bar resting period over here, and it's 3 bars. Looks good to me. But as soon as you see the bottoming tail and you break above 325, it's over. Done. Finished. Forget about it. What about here? It's over. Done. Finished. Forget about it. Look at the volume spike. Look at the tail. And that tail is nasty. This one you're not going to be able to save as much money on, right? Because by the time it tags you, it's probably 147.60, 147.70, but you can save a third of an R, something like that. And then what happens? Chops, 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 and boom, stops you out. 148 was the stop. That's not what you want to see. Guys, it happened today on, was it Baidu? Right? Same thing. Go back through the chat log. Go back, scroll back up through the chat log. What did I say? It's over. It's finished on Baidu. When Baidu did the same thing, it left a big old bottoming tail. Go back through the chat log. I said, it's done. It's finished. And I was right. Thankfully, didn't really lose much money on it. Okay? So guys, this is how you spot momentum shifts, by reading the bars, by reading the candlesticks, by reading the location of the chart, the level, the depth of the penetration. Is it an engulfing bar? Is it a bottoming tail bar? Where is it happening? What are the market conditions when it's happening? Was there a volume spike? So what are we doing? We're getting multiple concepts and we're putting them together. little piece here, little piece there, little piece here, little piece there, and all of a sudden we can start looking at the puzzle. Because that's what you're doing. It's hard to judge a puzzle by one puzzle piece. But if you give me 5 pieces, I have a better picture of the puzzle. You give me 10 pieces, 20 pieces, now all of a sudden I'm putting that puzzle together. That's what this is. That's all this is. Multiple concepts converging in an area. Exactly right. And guys, how do you do this? You saw it last week. I need to reiterate it. You put a plan on paper. You go out into the market environment and you try to implement your plan. I use the word try because it's not always easy. Then you measure your efforts. You assess the measurements and then you make adjustments, make improvements. It's like sports. You're losing after the first half. You go into halftime and you start doing what? So you started the game with a plan. You went out and you tried to implement the plan. And one of 2 things happened. You implemented and it's not working, or you didn't implement it. One of the 2 things happened. You tried and you implemented it. It just didn't work. The team was too good. Or you didn't implement it. So that's the measurement. Now you have to make an assessment. Like, you know what? You guys actually implemented our plan. Our plan's just not working. Okay. Now I need to make some improvements, some adjustments. Come back out after halftime. You make some adjustments. Trading is the same. You do this over and over and over and over again. No, I'm not telling you to completely rip apart your plan every trading day. No, but you're going to make some small assessments and measurements every day. And after you have a week, a month, 2 months, 3 months of those assessments and measurements, you're going to start seeing patterns. You're going to start going, wow, over a week, I wasn't sure if this was really real. But now over 3 months, I know it's real and I have to do something about it. You see, if you swing at the first pitch every time and you strike out 3 times in a row, that's not a large sample size. But if you swing at the first pitch and you strike out, 92% of the time over 200 at bats, that's a problem. You have to make an adjustment. And this is what traders need to do. You need to take the knowledge that we learned today, bottoming tails, topping tails, engulfing bars, volume spikes, location, level, depth of retracement, knowing when the market and the momentum is going to shift. And you have to start implementing those into your trading plan to be a better trader. But to do it over 1 trade, 1 day, 1 week is tough. Make sure you have an accurate or ample sample size. And that's different for everybody because some people take 10 trades a month, some take 100 trades a month. You'll have that sample size quicker or later depending on who you are. All right? So I hope that you guys learned a little bit about momentum and the shift of momentum, how to spot momentum shifts in the market, in individual stocks as well. There are definitely clear and concise things that you are going to look for that we discussed today with the volume spikes, with the bottoming tails, with the engulfing bars, with the location, with the level and depth of retracement, with how many bars up it is, with the market environment, etc., and so forth. And I hope that those things will help make you a more accurate trader. And remember, listen to the chart. Don't talk to the chart. Listen to the chart. Make sense? The chart is speaking to you, and how it speaks to you is sign language. It speaks to you by the next bar, the next volume spike. And you sit there and you listen. You don't talk back to it, you listen to it. And then with the information that you got, the new information you've received, you make the necessary adjustments. All right, so I'm Jared Wesley of Live Traders. We'll get back at it again next week.